Are you thinking about buying a house in Northern Virginia and you're starting to see that interest rates are on the rise and you're thinking to yourself, how will this affect me as a buyer? How will it affect the housing market as a whole? Will the market crash? Will prices go down? Or will prices continue to keep climbing up? Well, if you want to know what those answers are, stay tuned because we're getting started right now. Boom! Hey everybody, it's David, your favorite realtor. As always, it's another beautiful day right here in Northern Virginia. Actually, I take that back. It's 12 degrees outside, so not so beautiful. But, well, if it's your first time here on my channel, please consider subscribing because every week I release videos what it's like to live, work, play, pros and cons, top neighborhoods, cost of living, the real estate housing market, basically everything that you need to know about living right here in Northern Virginia. Interest rates. Who doesn't love talking about interest rates? No, in all seriousness, I actually had another video lined up for this week, but for the past couple weeks, I've been getting the same question every single day from my clients, and that is, hey David, with interest rates rising, how is it going to affect the housing market in Northern Virginia? Will prices go down? Will they go up? So I knew I had to 100% address these questions right now with the video. So yes, rates have risen here in the past couple weeks. In fact, they actually raised way sooner than anticipated. Most experts predicted that rates would go up in that March, April, May timeframe. And we may not even be done yet. Rates may even get even higher because the Federal Reserve just had their meeting earlier this week and they're pointing toward another rate hike this coming March. So where were rates in 2021? Well, consistently throughout the year, I was seeing that 2.65 to like 3% range. And in fact, my last two clients for 2021, they both closed like the last week of December. One had a rate of 2.85, and the other one had a rate of 3. Well, guess what? Those rates under 3%, those days are long gone. So where are rates right now? So according to nextadvisor.com, the average rate this week in the US is 3.75%, which is actually the highest since March of 2020. And we all know it started March of 2020. Now, what rates am I personally seeing for my clients? I'm seeing a pretty big range. I'm seeing about like 3.25 on the low end to as high as 4%. Now, there's gonna be a lot of factors involved to, what rate you're gonna get. Like, what is your credit? That's a huge one. How big of a loan are you getting? What's your down payment? What lender are you using? What loan program? So there's a lot of variables. But in a nutshell, I'm seeing that 3.25 all the way up to 4%. Cannot believe I'm seeing 4% already, and we're in January. So what direction are rates going in here in the next 3, 6, 9 months from now? Obviously, I don't know. I don't know the future, but I'm just gonna kind of make a wild guess. If I'm already seeing 4% interest rates, I would not be shocked to see 4.25 or even 4.5% by the end of 2022. I know we've all been spoiled this past year plus with rates under 3%, but even if they, let's say, hit 4.5%, historically, that is still a fantastic rate. And let's look at this chart showing the history of interest rates. Let's go back to when I was born, 1982. The average rate was 16%. That is absolutely ridiculous. And then 1983, 13%. 1986, 10%. 1990, 10%. Let's get a little sooner. 1998, basically 6.94%. The mid-2000s, 5.84, 5.87, 6.4%. We have to go all the way to 2010 before we start seeing interest rates below 5%. As you can see, even at 4.5%, they're still historically low. And they're right on par with what rates were in 2018 and 2019, kind of right before the pandemic started. So how does a rate increase affect your buying power? This hands down will be the most important thing I'm going to discuss in this video because I'm going to go over a couple examples with you because it will affect your buying power. Okay, let's jump on nerdwallet.com, check out their mortgage calculator. So let's go with the $600,000 house. We'll just go with 5% down. That's pretty common down payments around here. And I'm going to go with the interest rate I was seeing very commonly in the beginning of the year, 3.25. So in this scenario, your principal and interest payment will be $2,480. Now, I'm already seeing interest rates as high as 4%, but let's say they hit 4.25. We'll look at the price difference in your monthly payment. So 4.25, everything else stays the same, $600,000 house, $30,000 down payment. Now your payment is basically $2,800 a month. That is a $324 difference. That is absolutely huge. Let's say in this scenario, the person buying this house, they can only afford $2,500 mortgage payment. So now that the new payment is $2,800 a month, they have to buy a less expensive house. So let's see the price difference of home that now they can afford. So I actually already did the math ahead of time. $535,000. We have to make the down payment of 5%, so everything's the same. So now you can see their monthly payment would be right where they can afford at $2,500, but now they're buying a $535,000 house. That is a huge difference in quality and size of a house compared to a $600,000 house. So yes, the biggest impact with rates rising is your buying power is decreased. So realistically, you have three options. Option one is you just pay more. There's just no way around it. You just pay more a month. Maybe you can cut things out like the Netflix, the Hulus of the world, cut the cable. A lot of things you could do to kind of save some money. Maybe don't go out to dinner and drinks as often, just to kind of make up for that monthly payment that you're gonna have to pay with the higher interest rate. Option two is you buy a less expensive house. As we saw in the previous example, they would have to buy a house that's $65,000 less. That is a huge difference, but that's probably the most likely scenario for most folks. And then the third option is you just don't buy a house. You can kind of stay in your current living situation. You can decide to rent. But those are basically your three options that you have to pick from with the rise in interest rates. Now, for the $1 million question, and that is, hey David, will prices go down? Short answer is no. If interest rates are going to like 8, 9, or 10%, this will definitely be a much different answer and we will be in a completely different scenario. But let me explain why I don't believe prices will go down. Back in like 2017, 2018, we actually went through a very similar scenario. Now rates weren't in the twos, but I remember at that time they're like 3.75, 3.85 range, and then they raised all the way to about 4.5% in like a matter of a month. And that was a huge increase, kind of like similar to where we are right now. But I remember back then, did the market slow down? Did prices plummet? They did not. And what a lot of buyers at that time did, they just reduced their price point because of the raise in interest rates. Now, did demand slow down a little bit? It sure did. But guess what? The best of the best homes, they still got multiple offers, sold for way over list price. And during that time frame, homes here in Northern Virginia, they still appreciated in value. The number one reason why prices are skyrocketing here in Northern Virginia comes down to supply and demand. So let's say higher interest rates slows down the demand. Well, that's only one part of the equation. We still have historically low inventory. In fact, in my 8 years in the business, I've never seen it this low. So I'll share with you some numbers showing you the active listings that we have in some of the most popular places here in Northern Virginia. So in the zip code 20147 and 20148, which is Ashburn, Brambleton, and the Broadlands, as of filming this video, there's only 9 active listings. That number should easily be 100. So it shows you how short of listings we are. Reston only has 21 active listings. That should easily be between 150 to 200 active listings. And then Fairfax only has 29 active listings. That 100% should be over 200 listings. So you can see, we literally need a 5 to 10x our inventory just to get a balanced market. I'm not even talking about like prices dropping, just to get a balanced market. Also, lower interest rates does not affect the inventory of homes for sale. No seller in the history of real estate has ever said, hey, you know what, interest rates have shot up, I think I'm gonna sell my house. No. People put their house on the market because they have a need. They need to move out of state. They need to get a bigger house, smaller house. They need to cash out. Higher interest rates is not going to cause more inventory to come in the market. So I'm going to give you an example why I do not believe prices will go down. Let's say, for example, a hypothetical scenario. Right now, 50% of all buyers left the market because of the rise in interest rates. And obviously that's not a realistic number, but let's be extreme. So this past weekend, someone in my office, they listed a townhouse in Burke. I think it was like $490 off the top of my head. And that townhouse received 14 offers. That is crazy. So let's say now 50% of the buyers are gone. That house still gets 7 offers. Now, do you think that house is going to sell for less than list price or over list price with 7 offers? Obviously, it's going to sell for more, even with half the buyers gone. In another scenario, a single family in that $800,000 price point in Ashburn last weekend got 8 offers. Again, for the scenario, 50% of the buyers are gone. That single family home still gets 4 offers and still gonna sell over list price. And if homes are selling over list price, they obviously can't be dropping in value. They're gonna be increasing in value, even with a lot less buyers potentially in the marketplace. And I personally literally study the real estate market here in Northern Virginia on a daily basis. And when I start seeing inventory go way up and increase and the demand slow down, guess what? I'm gonna make a new video, update you every step of the way, letting you know, hey, this may be the perfect time to get some good value. But I don't see it yet, but I'm waiting, and as soon as it happens, a new video will drop. So what can I see happening? 100%, I can see homes getting a lot less offers than they have been getting in the past 12 to 18 months. So it'll make it a lot easier to secure a home. Let's say that single family home you wanted usually would have gotten 8 to 10 offers, maybe gets 2 to 3, and you don't have to go $50, $60, $70,000 over to secure that house. So it can make finding a home a lot easier. Also, another outcome we could see is homes sitting on the market a lot longer, and where you're potentially the only offer. And if that's the case, guess what? That opens the room for negotiations for you as a buyer. Maybe get $10,000, $15,000 off this price. Another outcome that we could potentially see, and which I 100% believe will happen, and that is a slowdown with our rate of appreciation. So homes here in Northern Virginia in 2021 appreciated anywhere from 15 to 20% on average, obviously depending on style of home, location. But this year, I'll see a slowdown with that rate of appreciation, so maybe homes only appreciate anywhere from that 5 to 10% range. Now, another question I'm getting a lot is, hey David, should I hurry and buy a house now before the rates go even higher? So this is tough to answer. We don't know if the rate's gonna keep going up. There's speculation, obviously, but maybe we've hit the peak here for the rest of the year. So if they don't rise, then you can take your time. But I will say this, buy a house when you are ready, when you have the motivation, a need, and you're financially able to do so. Don't buy a house just based on interest rates, because they may not go up any higher. Have they risen? Yes. Can they keep going higher? They could, but they also may not. Or maybe they don't go higher until the end of the year. We do not know. So if you're in the market for a home, don't rush it just because of interest rates. Take your time. My clients, it always seems to work out perfectly. Even if they lost, let's say 2 or 3 multiple offer scenarios, the third or fourth house that they win always ends up being the best. So take your time. The best home will come when it's meant to be. And I know nobody loves paying more a month for a house. And I just went through the same scenario myself. I went on a contract for my house back in September, and literally 2 weeks earlier, rates were half a point less than when I went on a contract. And obviously, I don't like paying a higher interest rate, but I'd much rather have my dream house at a slightly higher rate than a house that I hate and I'm gonna sell in a year, but I have a lower interest rate. And I want the same for you. I want you to get your absolute favorite house of all time. If you're ever thinking about moving to Northern Virginia, reach out to me, give me a call, shoot me a text, send me an email. You know I got your back. If you want to learn more about living in Northern Virginia, check out this video right here. This is a fantastic video, and I'll see you on the next video.